2 more minutes and I'm gonna start ranting. This is not good, but I'm gonna start ranting. So 2 more minutes. Okay, so let's get started. Okay, so what I do have here is gold, and really disappointed with what happened on Friday, and I wanted to share with you what my thoughts were about that. It's actually not, I don't know what happened on at 1 p.m. But market move, and I was looking for a break out of the 2000 level. Finally, it happened at 1 p.m. and I was not looking at it. Actually, it was a little bit after that, 1:30 p.m. But it started to move from the low at around 12, I think, 12 to 1, it started to move. So I wanted to share that move and why I missed that trade. So let's get started. So here we have the daily chart. If I go and put it back here, we do have the monthly, I mean the weekly, right in the left side. So right here, did you do that? Yeah, right in this area here. This is the weekly chart. And the weekly chart, I do have some channels here. This one, it's moving to the upside, and it was broken actually this day here on August 7. And or this week here, and then it started to move within this channel, and then last week broke to the upside, and then moved back down to the moving average. This is the 30 simple moving average for weeklies. And then it started to bounce back up again. So you see that momentum in the weeklies is bullish. We do have a breakout of momentum same week, moving both to the upside, and at the same time breaking to the upside in the on the 30 week moving average. So this is very bullish, and then you do have also intermediate market forecast also rising and moving to the upside. So gold is bullish, and it's breaking there. So what I would like to see, and I don't know if we're going to see this, but it would be something like moving to the upside, then come back, and then move again, revisiting this area here. For now, we're moving to the upside. Now, let's see on the daily. Let me expand this a little bit. And in the dailies, we do have a doji on Thursday, and Friday really broke to the upside up here, and so gave us a red, a green arrow. The MACD. This is in the stochastics. In the MACD, it's moving down, but it's this one is flattened out. Volume is above average, not as strong as here, but it is strong. And then move to the I mean strong when I mean it's above average, right? With respect to in this section here, you see that it's at or below average, and then here you do have more volume. You can see that it's moving up. Mm-hmm. And so let's change monitors. I'm gonna show my my 240 minutes. Let me expand it first, and then I'm gonna move it. Okay, so this one is that one there. Okay, so on the 240 minutes chart, we do have this diagonal that I had it painted before the explosion here. I was really looking for it to break, and made an attempt in the middle of the day, or the beginning, the early in the day at 9 a.m. and then came back and started to range here. So by the time that the market broke, or gold broke to the upside, I was not looking at it, and I didn't have any resting order here either. But I was looking for the 2000 level to be broken, and now it's $18, $16 or above 2000. So we'll see what is going to happen. This one is a nice bullish candle right there. Okay, so yeah, that is the 240 minutes. Let's go back to the 30 minutes. So in that way we go, and in this screen here I do have the 30 minutes, and you will see what's happening here. So by market opens at 8:20 right there, and then we did have news. I believe we did have news at 8:30, so there was a little bit of move, but the market was ranging here, what's really horizontal, and I was the overnight was analysis was giving me this range here. So it was moving up, down, up, and then moved down, and really there was a base here. And when the market started to move, at around 9 a.m. to move there. I put an order right up here. I believe that it was right there, thinking that the market, if it moved, it was going to move with strength to the upside. But there was a lot of congestion in this area here. Let me put so in this area here, there is a lot of congestion, and so the price needed to break this area up here, which is the base of this compression right here, right? So I didn't feel comfortable, and I thought that it was going to be a risky trade right there, but it's a really well-defined base for this range. So that one there was the lower part, then came back down and bounced off of this 200 simple moving average here. So then this is the 30 minutes. So it started to move to the upside, and then finally broke this area here, that area here, and started to move to the upside. So really the sweet entry, there were two. So the first one here is that one, and then but the really the one that was triggering the whole move was the 2000 level break. So then you have one candle that was very strong, and the second candle that was very strong, and then it stayed there, forming now a bull flag. We'll see if it holds, but there's a bull flag on the 30 minutes. So let's see what happened in the let's see what happens in the Renko chart for the entry. And let me take this out and this out, and let me go back to that screen. So, okay, a couple of things that I'm gonna see here. The first one is this point and figure chart. And really what I didn't have this one. What I did have was the 8, not the 5. So I'm gonna put the 8 instead. And this is what I had on my analysis here. So I did have that as a resistance area. So, you know, I was looking at it, and then if you see the live that I made in the morning, on Friday, you will see that I was looking at this one, and I was saying, okay, if this one is broken, this area is broken, then the next level of resistance is going to be the previous high, and then if that one is so what I did was to put this line here really at the 2000 level, right? So then what I said is, okay, so if this one is broken, then the next level of a resistance is going to be the previous high, which is this value right here. But it really didn't do anything. It didn't respect this resistance. It just went through, and then now started hit R2, resistance 2, and then started to move up, and now resistance 2 is now support. And then you see that this red area here, which should be a reversal zone, it was not respected either, and it moved above this lines here. Hopefully that is clear. So if we move this point and figure and put a size of 5 instead, you see that right at the R1, above the 2000 and right above the previous high, made a come back in the previous high or Thursday high was actually now a level of support, and then moved and put a second leg right there. If we count, let me see if we can count this. It's a lot of them, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, I'm not gonna continue, but we have 10 here. Times 3, let's say it's gonna be around that. So the other way is to do a measure move here. It's probably more intelligent. So we do that from here to here, and then that one there, you see that it's a little bit smaller, but it is a measure move for sure. So sizes is the size is really big. If we measure what was the profit here from the base, which probably is not reasonable, but that is $1,500 right there in one contract. And then if we do the same from here to there, it's another 1440. Okay, so yeah, pretty upset because I was looking at this break and really didn't I didn't catch it. How did you draw the line in candle chart? But when you open Renko chart and you still show, please show me. I'm sorry, I don't understand the question. Let me read it again. Okay, I don't know if you're referring to this, but let me show you something that I do regularly. So let's say that I paint a drawing, so that one there to here, right? And then you want this one to show in all the charts. The only thing you have to do is go to the properties on this one, and here you go and put all charts instead of just the point and figure. I don't know if that is a question you have. Say yes or put a Y in there in the chat if this is what you meant. Okay, good. All right, so so that's what you do, and then you will see that line in all the charts there. So okay. So this one is a measure move. Actually, I'm gonna delete that one from there. And but you know, since I use my my Renko charts instead of point and figure. This one is actually a higher time frame for me, and the size on this one is 8. So so that is the size. If I go there to show you what is the configuration on the point and figure, I do have 8 with a reversal of 3, and I put these minutes and 1. So that would give me a good idea on where the market is going. So yeah, so there's a bull flag here in the point and figure. We'll see if it next week this price keeps moving up. It seems to, right? We'll see. It's bullish. So the bias is to the upside. Let's see now the entry chart on the. Oh, before that, I'm gonna show the larger time frame. This one is a Renko in a higher time frame. This one is a size of 8. higher time frame for me. So I do have the analysis. It started to, move in this area here during the day, and then I do have, close of this at 1:30, and that is when actually started to move up above the 2000. So it is what it is. Normally, I like to trade gold in the morning, in between, 9. No, not that early. Yeah, in between, not that early. What do I have here? 7:30. Yeah, 8 p.m. I don't know why this one. Oh, this one is not correct. I'm not looking. I normally I don't. I just look at this as a reference. For direction, but it's not my entry chart. So these areas here are not correct. Anyway, so what I do is to trade from 820, which is around this area here, to around 10, 30, 11. And in this area, you see that it's really, really sideways. I was not looking. I was not confident that this one was going to move up. But then at lunch, this is lunch for me, right? So try not to trade. Volume should be lower, and then after that, the market started to move, and I was not looking at it. I was not looking at the computer actually. So that's that. And now in the entry chart, if you see the video or the stream that I had on Friday, I had an entry after the market opened, and now here, why this one is showing me there's something wrong here in my chart. It's this should be 820 right there. Okay, but anyways, made a high and then a low, and then a similar high here actually. So right there, that one there, and that one there, similar high. And I had an order put right above this one, right above there, and then I took it out and came back because it didn't trigger. And I was not feeling confident that it was going to trigger it. And I was saying in that video, look at the video. I'm not gonna go much farther, but you see that that there's a range here, right there, and then this one was moving right up below that range. So I was not feeling. I was saying, okay, this is a really risky trade, and actually it was. It came back and started to move in this range here. But now, what we do have here is a really well-defined area of resistance, and also a well-defined area of support right here. So it was actually in a range in the Renko chart, and then boom, broke this well-defined area, broke through this supply the supply area, and now kept going all the way there, moved above the previous high, came and revisited, and then kept moving up, and then even it went above this red zone, which is the projection of this white area right there. Okay, another question. Let me see. What is your indicator? Vertical is showing your reversal. I mean, red or green, showing volume, but buy sell. Okay, are you referring to this that I marked in yellow boxes right here? Yes or no? Is that what you're referring to? Okay, I will see if I don't know if I understand. Well, if this is what you're asking, so I put an order. Okay, if this is what you're asking, so this is actually a Fibonacci. Okay, so it's a Fibonacci retracement, and you have, these are the values you have there, and each value there has a color, right? So this one is transparent, 100 is transparent, 200 is red, 300 is red, 0 is solid gray, and then minus is transparent, minus 100 is transparent, and 200 is green. So when I do that, then you can create these areas of support and resistance, basically where the white or gray area here, it's a range, and in the video on I see you have a vertical line when Renko turns to green or red. Oh, okay. These lines here. Okay. Yeah, this is not when they turn to green or red. What happened is that I use an indicator that is this one here, right? Where you get the red and green. Red is 18, is the 20, it's the 18 EMA, and the 34 EMA is the green, is the yellow. The area in between is green, so I put it in green here by selecting the well, it color codes the area in between the two of them. But also, if you put the price panel background activated, then I do have a green and red every time that this two lines cross. So if the 18 is above the 34, then it marked a green arrow. I mean, a green background there, and same if it crosses the other way, it shows a red arrow there, a red bar or background. Okay, so hopefully that explains. Okay, so I was saying that if we move here, you see that at this point, momentum is all the way up here, right? So very, very high. And then, so what you do have is a big move, came back to hit the previous high, and then another leg moving all the way up here with one little retracement right there. And then came back down to this area, and then moved and made the another leg, but this one is actually very short-lived, and it started to bounce up and down. Now, this is after 2 p.m., so the move, it was really in an hour, from here 1 p.m. I would say, all the way through 2:30, or even 2:20, 2:30. So difficult to catch that one up if you're not looking at the computer, right? So that's what I wanted to rant about today, and really I missed that very beautiful, nice trade on Friday. But couple of things that are important here that would help you to be probably a better trader. You know, you need to understand that in here you were actually in a range. You were in a range right there with a bias, a bullish bias right there, right? So you have a lower, it didn't. So from here to there, there's actually a higher low right in this area. So, but it is definitely a range. And then when it broke out of the range, the sweet spot is actually right there. That is actually the sweet spot. It's probably not this one here. This one, as I said, was a little bit too risky because of this range here. But that one there was the sweet spot. Still, you do have a resistance here, but it's not actually, I don't think that that one is well defined. Yeah, it was not actually well defined. There's nothing like behind this one that would support and have multiple areas here. But if you consider this one here and put it right there, oh, I'm gonna do it with this. So so if you take this one here and put a diagonal right there, you know, you have one entry right here, sweet spot, breaking up above the 2000 level. Second entry would be that one there on the break of that diagonal, because in here you do have a actually you do have here a triangle, right? You see that triangle, you know, that one there and this one here. So you do have a triangle, but then so the second entry would be that one, break of the triangle, and then the third one is actually the previous high break, and then move that one. The one that would give you more profit, let's say, would be another would be that breakout of the 2000. Okay, because it's a well-defined area of a resistance that now it's support. Okay, that's what I had for today. I just wanted to rant and share with you a little bit my well, it's not bad luck. Bad luck is when you lose. But in this case, I didn't take that trade. All right. See you guys next week, and hope you had a great weekend. My God, I always... Oh, I always forget to I'm gonna do it again. I'm sorry, but I'm gonna continue with this. I think I owe you this one. So I'm gonna change my monitor. I was explaining everything without my monitor up. So let me change my monitor to this one here, and okay. So this is what I was talking about, the 30 minutes. Okay, I'm sorry about that. I will explain it again. Okay, so I do have a diagonal here. I was saying, okay, I'm gonna paint this diagonal right there, right there, and then there is a diagonal right up here as well, right? These two are forming a triangle. You see that, right? We are not at the end of the triangle yet. When you see that, you know, the triangle is filled all the way there, most likely this one is going to keep going sideways. But it broke, you know, on the third touch, it broke to the upside. So what I was saying is that here in this half or 30 minutes chart, in this 30 minutes chart, you have a sweet spot to enter right there. Okay. Then the second spot to enter is at the break, a little bit above, at the break of that triangle. And then the third one is above the previous day high. And if it comes to this green area, right? So if it comes to this green area, it's going to try to come back to that area here if the market is sideways. Okay, I'm sorry about that. I I sometimes I forget to change my monitor, and I keep explaining things. So all right, so yeah, that's it. Now I'm gonna stop the streaming. Don't forget to like it and subscribe to my channel. Thank you so much for watching, and see you next time. And have a good weekend. Okay, what is a sorry, I do have another question, I think. Could you show me how to set up that line? I'm sorry, Dean. Which one do are you referring to now? How to set up what line? Are you still there? Okay, tell me what line, and I will show you. Okay, I don't know what line you're referring. I don't know what line you're referring to. If it's this line, this is a diagonal of the drawing chart that I have. You do have several, and you can use that line right there. I believe that F2 would give you a line. I'm not sure if that is the one that you're referring to. Okay, I have to go. Thank you so much for watching, and yes, see you next time.